What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to take a look at Ethereum. Starting off, the SEC has delayed its decision on whether or not to approve Fidelity's Ethereum ETF. The new deadline for the SEC's decision has been pushed back to March 5th. In a statement made by the SEC, the Commission finds it appropriate to designate a longer period within which to take action on the proposed rule change so that it has sufficient time to consider the proposed rule change and the issues raised therein. I'm not sure if that sentence is even grammatically correct. What the SEC just said is a bunch of word salad that doesn't mean anything. If you recall from previous Bitcoin episodes, BlackRock's approval rate when it comes to filing ETFs is at 99.8%. In other words, whatever BlackRock wants, BlackRock gets. Obviously, if the BlackRock Ethereum ETF gets approved, the Fidelity Ethereum ETF will get approved as well. Just a reminder, BlackRock and Fidelity are top 1-2 in the asset management industry. Moving into the charts, Ethereum is on the left and Coinbase is on the right. A few weeks ago, we did call the top on Coinbase stock, and Coinbase has crashed 30% so far. The reason we were so confident is because Coinbase stock was trading at the cluster of 61.8% Fibonacci retracements and extensions, along with our topping signals on several indicators. Currently, Ethereum is trading at the same cluster of 61.8% Fibonacci retracements and extensions. However, there are a few differences. One difference is that Coinbase stock is crashing impulsively to the downside. Meanwhile, Ethereum is just consolidating. Notice how there's a lot of overlapping price action on Ethereum, whereas with Coinbase stock, it's just red candle after red candle after red candle. The second difference is that with Coinbase stock, we had a higher timeframe bearish reversal pattern with a gravestone doji and a bearish evening star reversal pattern. With Ethereum, we do not have a higher timeframe bearish reversal pattern. Because the topping signals are a lot more unclear on Ethereum as opposed to Bitcoin or Coinbase stock, this is why we said last week it wouldn't be the dumbest idea to just diamond hand your Ethereum. If you check previous Bitcoin and Ethereum episodes, I've personally sold on the Bitcoin ETF launch, so obviously I want Ethereum and most cryptocurrency assets to go down, but I can still be objective. Now, with that being said, in yesterday's Bitcoin episode, we reviewed the pre-halving corrections where Bitcoin in 2012 crashed 49%, in 2016 Bitcoin crashed 38%, and in 2019 Bitcoin crashed 71%. Go check out the previous Bitcoin episodes if you want to know more about the pre-halving Bitcoin correction. Now, today I calculated how much Ethereum went down during those Bitcoin pre-halving corrections. In 2016, Ethereum crashed 71%, and in 2019, Ethereum crashed 75%. Now, obviously, we don't believe Ethereum is going to repeat a 70% crash. The reason is because in yesterday's Bitcoin video, we stated that Bitcoin's current correction is very similar to the 2016 pre-halving correction. Now, if you've been following us for the past few months, we've been very bullish on the Ethereum against Bitcoin valuation. So if the Ethereum against Bitcoin valuation continues to follow our upwards projection and Bitcoin crashes 30 to 40% like in 2016, that means Ethereum should crash less than 30 to 40%. A 30% crash on Ethereum would land Ethereum at the 38.2% Fibonacci retracement around $1,766, as we discussed in the last Ethereum episode. And as stated before, the 38.2% Fibonacci ratio is one of the strongest Fibonacci ratios. The price targets from last episode still remain unchanged. Moving into some indicators, starting with the RSI indicator, we can see that Ethereum is printing bearish divergence on the 2-day time frame. As Ethereum is making higher highs, the RSI indicator is printing lower highs. Shifting gears to the MACD indicator, similar to the RSI indicator, we have bearish divergence on both the signal line and the histogram. Once again, notice as Ethereum is printing higher highs, the MACD histogram, which measures momentum, is making lower highs. There is a possible bearish MACD cross on the 2-day time frame if Ethereum continues to drop in price. Closing things off with the Ethereum against Bitcoin valuation, if you're wondering why Bitcoin has dropped nearly 20% but Ethereum has barely moved, the reason is because the Ethereum against Bitcoin valuation continues to look bullish. As of this week, the Ethereum against Bitcoin valuation has broken out of a bullish falling wedge. As stated for a few months on this channel, all the price action under the bullish falling wedge was just healthy consolidation, holding the white 1.618 trend-based fib extension as support. Taking a look at the RSI indicator, the bearish divergence back in 2022 led to a very long downtrend. Let's see if the bullish divergence can lead to a sustained uptrend on the Ethereum against Bitcoin valuation. If you take a look at Coinbase's trading volume in the screenshot above, most retail investors have completely given up on Ethereum. Quarter after quarter, the amount of retail investors trading Ethereum continue to decline. To be honest, this makes us even more bullish on Ethereum's future when the bull market really takes off. If we were forced to purchase either Bitcoin or Ethereum today, we would purchase Ethereum. As stated on this channel a few times, we think Ethereum is going to have a better bull market than Bitcoin. Okay, so that's my analysis on Ethereum for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.